Hey everybody, it's a very special, for the first time in 9 years, I am going to take live calls from the audience and interact with founders. We cover a large range of topics, including how to build a team if you have no team for your startup. This is a critical skill. Also, we talk about exchanging skills that you have for equity in startups as an advisor and the best practice on how to find those advisorships. And we talk about the new trend, service as a software model, not software as a service, but service as software. And we answer the question, what is the best way to get mentored by an angel and the best way to meet angels in Silicon Valley? It's a great episode with a lot of interesting discussion. And we answer the question, is Magic Leap the new Theranos? Is it a fraud or not? We answer that question today on This Week in Startups live call-in. Stick with us.
This Week in Startups is brought to you by Squarespace. Check out squarespace.com for a free trial. And when you're ready to launch, use offer code TWIST to save 10% off your first purchase of a website or domain. Uber. Read all about the ways Uber is moving forward by going to uber.com/movingforward. And Dojo Mojo. Find and connect with over 5,000 brands and create marketing partnerships. Get 1 free month of any plan, plus 25% off first paid month. Visit dojomojo.ninja and add promo code TWIST. That's dojomojo.ninja and add promo code TWIST.
All right, let's take a live question from the chat room here. Shiante, I hope I'm pronouncing that well, says, "Hi, Jason. I'm looking for an investor, but I don't have a team. People in my immediate circle aren't really visionaries, if you know what I mean. So I need help in that area also. What should I do?" Great question. I hear this a lot. Let me speak candidly with you. If you can't build a team, the way investors will look at it, that piece of data, right? So everything you do is a piece of data. So being unable to form a team will signal to investors that you are not fit to be the leader, because what we see over and over again is charismatic leaders who are passionate about solving a problem, and they go out to market and people can't help but want to join their company. In fact, some people will join companies and work for free for a year for equity, or they'll build it on the weekends because they're so motivated. So candidly, if you can't, it's kind of like you're not even getting to the starting line of startups. You have to be charismatic enough, and you have to have a great idea that people are willing to leave the security of Google or Facebook or Uber or their master's program, whatever it is, or their own business or their own side hustle to work on your side hustle. This is the litmus test for founders. Can you get people to join you on the adventure? Shackleton, the famous explorer, was incredible at leading people into disastrous, dangerous situations. And when he would go up to the North Pole or South Pole, wherever he went, he was just doing these crazy journeys. He put out a want ad, and his want ad was, there's little chance you're going to survive. It's going to be hard, and there's going to be very low pay. He basically optimized for people who wanted to join, who were really true believers and hardcore people. So let's step back from that for a second. So it's important for you to note that if you can't solve this problem, you can't get funded. So if you're complaining or wondering why you can't get funded, if you can't build a team, that's a prerequisite. That's considered table stakes. It's considered things you need to be able to do as a baseline to be a funded founder. So let's step back and say, hey, if you're new to this, how do you build a team? Well, the way to build a team is to network like crazy, meet a lot of people, work on a lot of projects, and maybe spend a year or two just working on other people's projects and being involved in the ecosystem. So if you have a singular skill, say designing logos or doing user interface or doing sales, you can jump into the startup ecosystem, go to incubators, ask if you can work for free on some projects, ask if you can contribute, but this would require that you have, wait for it, a skill. And so what I find is there's a lot of people who have ideas, are unable to build a team, and they have no default skill. And you need to have a skill or the ability to lead a team. This is absolutely critical. If you don't have either of those, it's going to be extremely difficult for you. So I would suggest coming to Silicon Valley or another tech hub and making your circle of friends the people who build stuff in the world. Join hackathons, et cetera, and get a specific skill. Great question. Okay, Gregory has a great question in the YouTube chat room, and you can find our, if you just do a search for This Week in Startups on YouTube, you'll find our channel. We have 114,000 subscribers. We're in a chat room right now. And Greg's question is, in your book, Angel, you mentioned how skills can be used to obtain not only cash, but equity in a company. Do you have any suggestions, or could you expound on marketing yourself in the Bay Area? Great question. Okay. So let's assume you have a sought-after skill, Gregory. I'm going to say your skill is in doing content marketing, right? So you're a great blogger. You can make great short videos. You're good at the social media. You're good at doing stories on Snapchat. You're good at writing Medium and LinkedIn influencer posts. You're just an all-around great writer, a great content producer. And what I would do is I would look through all of the incubator classes, Y Combinator, Techstars, 500 Startups, etc. I would look for companies you're passionate about. Then I would reach out to the founder and say, I am an expert on content marketing, and I'm looking to build a portfolio. I think what you're doing with Calm.com, I'm just picking a name here if it was 4 or 5 years ago, is super important because meditation and mindfulness have helped me a lot in my life. So you're making it personal. You're showing that person that you have passion. I would love to work for free or for equity as a consultant building social media marketing for you and helping you with content creation. I have 10 hours a month. I have 10 hours a week, whatever it is. Can I meet you for coffee anytime? And by the way, I took the liberty of writing a list of 5 blog post ideas that you could do. And these 5 blog posts correlate with SEO terms that you're currently not ranking for. So you actually don't have a mindful course, online mindful course as a SEO topic, and you're ranked weekly for that, and that's one of the top searches. So if you wrote these 5 articles, you might build some authority around online mindfulness course. This would be so compelling that you would at least get the meeting. And you do this 10 times, all of a sudden you might have 2 or 3 customers. So you can draft off of those companies' brands, and then if they become successful, you can say, yeah, I did the content marketing for Calm.com in year 1. Yeah, no, I know the founder. And you've built a relationship with the founder. What I find is people are not bold enough and they don't take enough risk. What's the worst that happens if you do a little bit of free work, a little bit of spec work, if you give out some free ideas? It's not like you're going to run out of ideas. You're going to have ideas till the cows come home. If you give away a little free work and you build up your resume, that's okay too. Some people are against spec work. I understand that as an institutional thing, like people doing work for free, all the time. But you're talking specifically about building up your resume. This is a way to do it. And then you can ask the person, hey, listen, if I do a good job, all I ask, can I use you as a reference, after you get the deal? And maybe you could ask them like, hey, is it possible you could write maybe a little endorsement of me on LinkedIn? I wrote one of you, right? So if you want to get an endorsement, when they first came out with that feature, I just went through my portfolio and I wrote something nice about 10 of my portfolio founders. Of course, the reciprocation effect, which you can look up, reciprocation effect, kicked in psychologically, and all of them wrote reviews for me. Same thing on AngelList. When I had AngelList, we're now on jasonsyndicate.com, but I would ask my founders to write reviews of me and endorse me. So that's a great way to do it, is get those endorsements and affiliate yourself with up-and-coming startups that have great investors, right? And you also want to have your social media, the marquee on your Facebook, LinkedIn, and Twitter pages, somehow explain to people natively what it is you're great at doing. So for me, they see angel investor in 6 unicorns, and I list the companies, and that immediately validates me in the eyes of entrepreneurs and other investors. If you were this content marketer, you could say content marketer building overperforming content for startups, including Calm, Fitbod, and Lead IQ. Boom. And now you have 3 references, and you say it in plain English, making exceptional content for startups. Boom, that's my gig. And then you make a blog, makingexceptionalcontent.com. So literally putting out a blog, a Medium post, a YouTube channel, whatever you like to do, a podcast about one tight vertical will make you a leader in that space. It's just called influencer marketing. So focus on one thing, do it better than anybody, offer it for free or in exchange for some stock options, and see if people bite and see if you actually have that skill and see if you're good at it. Okay, great question, Gregory. We took the Launch Festival down to Sydney this year, and we wanted to make a completely new website, and I just thought to myself, this is going to be so easy. We're going to get the domain name launchfestivalsydney.com, and we're going to just turn it on Squarespace.com, and in minutes, we had a gorgeous website. And everybody on the team was updating it. And we looked so professional so quickly to our partners in Sydney that when they saw the logos of all the partners, we were able to sell 5 other sponsorships. You heard me correctly. That beautiful website made all the partners say, I want my logo up there looking gorgeous on that Squarespace website. And we were able to sell 5 more sponsorships. That's money in our bank because, and giving us the ability to run this event because we had such a beautiful website. Think about it. If you were going to sponsor an event or do business with a company or hire a consultant, if their website looks janky and ugly and it doesn't work on mobile, it's not responsive, it's not a gorgeous template, and it doesn't stay up and running, and it's not fast and secure, you look like an idiot. And then people don't do business with you. But the converse is also true. If you use a beautiful Squarespace website and it has all those great features and it's optimized for mobile and it's fast and you can choose one of those over 200 extensions, well, you know what? They're going to find you and they're going to want to do business with you because your website is tight. Tight is right, and Squarespace will make a beautiful website for you. Of course, they have 24/7 award-winning customer support, and of course, they have search engine optimization analytics built in. It just works. It's flawless, and a great website is a worthy investment of your time, even as CEO. Even as the co-founder, you need to go look at your website right now and think to yourself, if I didn't know this company, I landed on this page through an email link or a tweet or a Facebook posting or randomly through a Google search, would you be impressed? If you're not impressed, you're doing it wrong and you're losing customers. Go to squarespace.com for a free trial and use the offer code TWIST when you're ready to launch, and they'll give you 10% off your first purchase of a website or domain. Thanks again to my friends at Squarespace. It is an invaluable tool. We love it. Go check out Launch Festival Sydney. You'll see a beautiful website. Boom. Go check out angel.university, founder.university, jasonsyndicate.com. I could go on and on about all the different websites we've created, but I would run out of time and we got to get back to this amazing episode. So thanks again, Squarespace. Use that offer code TWIST, get that 10% off. I know you don't need the 10% off, but use it so they know. And get ready to have a beautiful, beautiful website today, like right now. Go do it. Okay, let's get back to this amazing episode. Hey, Matt, how are you? You're our first caller on This Week in Startups live calling show. Congratulations.
That's fantastic. That's exciting. How's it going?
It's going very well. Tell us, what city are you in?
I'm in Phoenix, Arizona.
Phoenix, Arizona. So I'm going to guess it's 102 degrees and dry.
No, it's 115 degrees and dry.
Okay. All right. Well, I'm going to advise you to put your Tesla on automatic climate control. You know they have that for the Teslas now? It'll keep it at
really?
A safe... Really so if somebody leaves their dog by accident in a car, a Tesla will actually, if you set it to keep the temperature at non-lethal. But it is kind of lethal, right? Every year you have people die or dogs die in cars out there.
It's
a really serious issue.
Also, I don't know if you heard, but actually today Tesla announced that you don't have to put down a $1,000 reservation anymore.
Oh, wow.
You can buy it whenever. So that's pretty exciting about Tesla. I'm hoping to get one within a few months.
You will love the Model 3. I have been driving it for a year, and as everybody is saying, it is the most compelling car you can buy today. The Wall Street Journal, which has been dogging Tesla, the stock, begrudgingly wrote that this is a game changer of all game changers and the most amazing car they ever drove, yada, yada, yada. So this is the Tesla bull-bear battle that you've probably been watching on the Twitter, the toxic Twitter, has been raging, and it is one of the most interesting debates I've ever seen because on one side, you have people complaining about the financial structure of the company, and then on the other side, you have people saying this is the best product I've ever driven. It would be as if people were concerned about Apple's cash position while loving the iPhone. It's just never happened in the history of Silicon Valley. So How do you think it's going to work out? Who do you think is going to win, the shorts or the Tesla longs? What do you think, Matt?
Well, definitely the Tesla long, because Tesla is not a normal car company. They're building something scalable because they have a bigger mission than just making a car. So because Elon's the type of person that he is, and because Tesla is going long, of course they're going to win. People don't like Tesla because they're kind of cheating the system because they're doing what startups do by raising a lot of cash and then growing quickly. But Tesla's just a startup. So
correct.
They just don't understand startup culture. And
look at this.
Elon does.
Our first caller is brilliant. Matt, you're brilliant. Is it Matt, your name?
It's Matt. Yeah.
Matt from Arizona. All right, Phoenix.
Matt from Arizona.
Matt from Phoenix, Arizona. I like it. That could be your name for the call-in. First time, long time. Have you been listening to the show for a while?
Of course, yeah. I've been listening for, I don't know, like 3 or 4 years.
Fantastic. What do you do out there in Arizona?
What do? I run a startup called Publoft.
I know you. I know Publoft. I know you. We've emailed. We're on the social media together. We have some kind of relationship that neither of us could actually put a finger on. But let's start with a question. You have a question. And it's publoft.com, right?
I do have a question. I'm curious, have you ever heard of let me back up. Obviously, software as a service is a very common model for startups. It's very scalable. But have you ever heard of the model or even thought about the model service as a software? Does that ring any bells, or is that kind of new to you?
I have not heard people say that specific thing. I'm assuming you own that domain name as an SEO expert and you're getting it on the air right now. But service as...
no, that's not. I have no
I'm joking.
to that actual
so
name.
I get what you're saying is like people, there are things that were previously services. Could you make them into software? So if you were a barista, could you take that service and then make it into software? Obviously, CafeX has. Yeah. So it is one of the harder things to do. So this is where white-collar jobs are going to start to become bionic. So they're not going to go away, but we have an investment in a company called Zendu, and what they are doing is bookkeeping and accounting. So you can outsource for $100 a month or whatever it is, your accounting, and they will do everything for you from your monthly P&L all the way to your taxes at the end of the year. And on the back end, they're taking each step along the way in accounting and trying to automate it. So they're taking the service of accounting and trying to make it into software. If they get 80% of that done, then that means each accountant would be able to do 5 times as much work. So it's just making people bionic, I think, is what we're going to see in the space. But you have some thoughts on this as well?
Yeah, well, I mean, I have a few thoughts on it. I mean, I think that in the services industry, it's all really inefficient right now. Like no one's dominated the services industry. You have Upwork that has kind of a lower tier of the freelancers.
Yep.
And you have kind of that whole market. But when it comes to higher skilled workers and higher paid deals, there's just hundreds or thousands of freelancers and agencies that have different systems and operations, and it's just not efficient for either side. So I think what's going to end up happening is someone is going to create an Upwork that works for everyone, that actually pays its workers like enough to live, and because it charges enough, because Upwork charges really low. And they pay low, whereas you have something like TopTal, they charge really high, they pay high, but they only let in the top 3%. Which the top 3%
and you have everything in between. You have Fin, which is FIN, which is a great company, and I was previously an investor in Searchable. You have Operator and Magic, so there are a bunch of people doing kind of virtual assistant, executive assistant as a service. $20, $30, $40 an hour. And I've used it. It worked. When I was on book tour last year, I said, I think to Operator or Magic, I forgot which one I was testing. I was testing all of them at one point. And I just said, I need a restaurant, like a pizzeria or a burger joint, 57th Street or below Central Park. That's 4 stars or better on Yelp or 80 or better on Foursquare. That can take between 30 and 50 people in a private room for $30 a head all in. Like pizza, meatballs, something very, burger and a beer, just something very simple for a book signing. They literally came back with like a pizzeria on 57th Street that was dynamite, brick oven pizza. And I was like, wow. They charged me, I think, like 45 minutes. So it cost me $30 or whatever. It was one of the higher end services, I think $20, $30. And I was like, wow, I literally typed something into my SMS and it happened. And so we'll see that a lot. And then AI combined with voice interface will make it so you or I could say, okay, Alexa, make an iOS app. Have it have Facebook, LinkedIn, and Twitter login and Google login. Have everybody have a profile page that looks like the Facebook or Twitter profile page, and let people follow each other and let people DM each other, let people post photos and videos. But everybody has to confirm who they are with an SMS code and over phone. and all of a sudden the app would be built. Like, that's coming. So I think even developers, what I just described when I went through that, a developer could be, and Gigster is doing this. I'm an investor in Gigster. They're doing it for developers. They have developers who can put that together very quickly, what I just described. And eventually those developers will just say it into a voice interface that will be built, and then they'll get to work on the next set of tools. So yeah, it's all coming, and it's going to come together through a combination of things. I think it's a really interesting trend for all of us to follow. Thanks for being the first caller.
Yeah, as a quick question, what do you categorize Dickster as? So are they a service as a software, or how do you categorize? I would say that
would be a nice way to say it, service as a software, yeah. They basically are a marketplace that puts together, I would say marketplace, they put together developers with people who want to build stuff. And so what are the pain points and the friction of hiring a development team to build your app if you were going to build a meditation app? Well, the challenge would be going to Gigster and saying, the challenge would be getting a quote, finding a list of people to build your website, getting a quote, and then starting to build it. And they do all that within a minute. Like, you can get a quote, I don't know if it's within an hour or a day or minutes, but it was trending towards hours, I think, like an instant quote. And then you can start building almost immediately. And then what they do is, I think they overpay the best developers. So what I described, a great developer could do in a day or a half a day. But an average developer, in another country who's just getting their legs under them, they might take 2 weeks because they got to look up, how do I do that? How do I do this? They've never done it before. So they will overpay great developers on a project basis and say, yeah, we're going to give you $5,000 to make this app either way, if you do it in 2 days or you do it in 20. So we might as well go with the best people and give everybody the best response. So I call it a marketplace, but I like service as a software. Cool. Well done. I hope you call in again, and good luck with Pub Loft. You do the SEO services, do you?
Blogging and SEO. Yeah.
I love it. All right. I don't see you blogging any favorite episodes of This Week in Startups. Maybe write a blog post if you want to get it.
I'll shoot you a link to it in a couple of days.
All right. Yeah. You write about your favorite episode, and then that's how you pander for a retweet from a high-profile influencer. Easy technique, right?
Easy technique.
Yes. Uber. Team Uber is working hard, and they are moving forward and improving the rider and the driver experience. They're extremely focused, and they now have a new pickup experience. Yes, one way they're doing it is with these new features, and they take the stress out of your pickup. Using pickup notes in the Uber app, you can share a note with your driver on how to spot you, like letting the driver know what color shirt you're wearing, or if you're wearing a baseball hat. You can also choose a color to light up your phone screen. You then hold it up, and that helps your driver more easily locate you at night or in a crowd. Imagine at the airport. So if you pick orange, my favorite color, you hold it up, the driver comes around, boom, they see the orange phone in the air, and they zip, 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 pick you up and get you on your way. These are just some of the great new features that Uber has added to the app. I love the tipping. I am a big tipper, and I like to tip for great service. I also if the service isn't great, I like to give that 3-star review. I don't want to crush anybody. And I like to give that feedback about how to make the ride better. So, that feedback is there, and I think you should use it. And if it's really good, you should consider a tip. And the pickup notes are great. Okay. To find out all the ways Uber is moving forward and see these great improvements, I want you to go to uber.com/moving forward. That's uber.com/moving forward. Again, uber.com/moving forward. Go ahead and visit that and see all the great changes by my friends at Uber. What a great product, what a great service, and what a great company, and it's moving forward. Okay, let's get back to this amazing episode. This question is from Daniel Craig. What is the best way to get mentored by an angel investor? Great question. I have no time to mentor other angel investors. I have my own team. It's a lot of work. That being said, there are other angel investors who would probably love to have what we call an analyst in the business or a researcher. So if you truly wanted to do this, I would email 10 angel investors, the same style email. And you've heard me craft language for emails. The reason I like to craft email an actual language for you is because it matters. And, changing the subject line of an email can change the open rate from 2% to 200%, 200% being they forward it to their friends and more people open it than people you sent it to. So the best way to do it would be to email an investor. It would be something like, "Hi, Cyan, I'm a big fan of your investments in Thumbtack and Uber. I am an aspiring angel investor. Basically, I'm you 8 years ago, and I am looking to do research for free and get some mentoring. I looked at your investment portfolio in your last 10 deals, and I thought I would show you an example. Your last deal, Contraline, is in this reversible vasectomy, non-invasive vasectomy space. I did some research on 3 other competitors in the history of this, and I found 4 patents in the area and around it. I also found a failed company, and I talked to the founder of that failed company, and he said the reason they failed was that the fluids and the gels, that technology was not robust enough. Hopefully that's changed. And now you've sent your analysis. Here's what I would have written before you made the investment. And if I read that and I think it's credible, I'd say, wow. So we call this give to get, and it relies on something called the reciprocation effect, which is something when you're in the airport and those monks hand you a flower and then they ask you for a donation. They've given you something, a flower, and then they're asking for the donation. They don't ask for a donation for the flower. That would be a transaction. What they're relying on is the reciprocation effect. I give you something, you give me something back because you feel obligated to me. So when you give to get, that works really well. So great question. Okay, do we have our caller on the line? We do. Okay, Siamak. And when we have the caller on the line, just do me a favor and tell me callers on the line in that little SMS. Siamak, are you on the line?
Hey, Jason.
Yes. Pronounce your name for me, please.
Siamak.
Siamak. Oh, I was so close. Like Sia, the singer. Siamak.
Yeah, exactly.
So easy. I should have got it.
That's what I go by at Starbucks, actually.
Oh, really? You go by Sia? I go by J-Dog. So I used to get my Starbucks, when I used to get my Starbucks with my maple scone, 600 calories for that thing. Don't stay off the scones. And I put J-Dog, and the woman on the counter knew me, and they go, J-Dog, what? When my drink was ready. So I always asked them to give me a what at the end. So Sia, your question. You have a question. Are you a long-time listener, or are you new to the show, or you just found us on social media?
Long-time listener, first-time caller.
Long-time listener, first-time caller. Sia from, where are you from, Brooklyn?
No, I'm from Toronto originally, but currently living in Redwood City.
Redwood City. Okay, no, I saw your number with the 917, so I just, not to give you up, but that's a New York number. So you're in Redwood City. Redwood City, quite nice now with all those new apartments they put up. And
it's quite nice.
Quite nice now. And they got the Five Guys burger joint. I love that Five Guys. And I also like the movie theater there with the D-box seating. I'll give you a little pro tip. When the show is sold out, Redwood City has D-box seating. It's $5 extra per seat, right? That sucks. But even if you don't want, you can turn off the shaking seat if you don't like it. But for every first-run movie, people look at it and go, $5 extra, it's not worth it. And then it becomes the VIP seating. It's like the new version of scalping. Have you sat in the D-box? The shaking seats yet?
I haven't tried it out, but I've heard about it.
Yeah, it's pretty neat. My daughter loves it. Okay, you have a question for me. Go ahead.
Check it out. So I'm a founder, and we're probably going to be going to raise a seed round in like a couple months, probably.
Mazel tov.
I want to ask you, thank you. Since you're the GOAT angel, I wanted to ask you, what's the best way to meet angels in Silicon Valley for like a founder outside of their, immediate personal network? So let's say you can get to like 10 to 15 angels from like immediate intros and things like that. But you probably need to pitch more people. So like, what's the best way to meet a lot of angels?
Fantastic. Great question. So the best way to meet any investor is to get a warm introduction. You'll hear that over and over again. And I think that is actually tied with another way to get introductions, and that's to have a chart that goes up and to the right. So if you have a chart that's up and to the right, in other words, you're growing as a consumer product 20% week over week for 10 weeks, and you can make a chart like that, everybody understands that 20% growth week over week, compounding, means you're growing very quickly as a consumer product. So a smart founder could shape that chart. I'm not saying lie about that chart. What I'm saying is roll out your marketing plan and your efforts to show consistent growth. And other companies have done this where they would let in a certain number of customers per month, they would hit a certain sales target for the month, and then work on engagement and making those customers do more engagement. And that chart can really change things for you, even if it's paid. And so there was a little bit of hacking of this concept at Y Combinator a couple of years back. I remember people would show me their growth chart and it would be like up and to the right over 12 weeks of Y Combinator. And I'd be like, okay, how much of that is Facebook ads? And they'd be like, yeah, busted. So you can literally make it up and to the right 20% week over week chart for 10 weeks by just paying. Now, in one way, you would say like, oh, you tricked me. But if you said, here's our paid acquisition, then I might just think as an angel, wow, this person's savvy. They know how to do paid acquisition. They know their lifetime value of a customer, and they know how to spend money to build a company. Great. So as long as you don't hide it, that's completely valid. You can say, here's our organic growth and here's our paid growth. We believe we're going to be a paid growth business like Dollar Shave Club and like other folks. So having a chart, which you do or don't have yet.
We are B2B, so it wouldn't be that kind of...
But if you're a B2B, you might be selling a product, right? So if it was sales and it was number of seats, that could be it too. So are you charging for your product yet or not?
No, we're not charging yet.
Okay. And so what I always tell founders is don't delay charging. If you charge people for a product, you get to ground truth quicker. What is ground truth? That's the truth that the people who are on the front lines of the war know. So if your sales team is giving away the product for free, you're not going to get any data. But if you say it's $100 per month and no, we don't discount, no, we don't do free trials, you have to pay, you have to go through training, or you say we do 30 days free and then we have a conversion call, or we do 30 days free, but you have to put your credit card in and automatically starts charging you on month 2, you'll get to the truth quicker. So I highly encourage putting yourself in the bucket of founders who care about revenue and aren't afraid to charge. Let's put that aside. Getting the introduction is critical. And so cold emails can work, I believe, if you have charts, if you have the nuts, if you have metrics, right? So traction. If you don't have traction, it's very hard to go in the front door and just say, pay attention to me, because not everybody reads every email they get. And I have a hard time reading all the emails I get. And I'll respond to 1 in 10, 1 in 20. I'll just say like, interesting, keep going. Or how do you make money? I'll write back little quick, short questions to engage founders to see how they respond. So what you would want to do is find other founders, network with them, ask them for advice, give them advice, right? Give to get, we talked about earlier in the program. And then you want to ask them to introduce you to their angels. So if you do them a favor, they'll do you a favor, and you can kind of be in the same team. So find other people who have had the investor so that you want. So if you wanted myself as an investor, or let's go with me. If you got in touch with Alex too from calm.com and said, I know Jason's an investor. I know he's been an impact investor for you at calm.com. I know we don't know each other and I don't want to get an introduction yet. I was wondering if I could show you my product and maybe you'd be interested in being an advisor, or you could tell me what you think Jason might think of it. And you'd be surprised if you ask 10 people, some people will give you some feedback and they might just write back like, yeah, Jason's like into traction these days, like get your numbers up, and he'll probably engage if you put a chart in there. So that's the best way to do it. It's hard work. It's hard to get an audience with angels, unless they're new angels. And so this is a little hack. If you're going after the well-known angels, they have more deals than they have time to review. If you go with new angels, people who've just started angel investing, they have more time than they have deal flow. So a wise person would look for people who just started a seed fund. They need deal flow. They haven't proven themselves yet. So those new funds, a lot of people are like, stay away from new funds. Thinking as an entrepreneur, don't stay away from new funds. New funds are liable to make a quick decision, invest, take risk. And old funds tend to be cynical, and they've already made their money. They've made their bones. They already have Google or YouTube or Apple or WhatsApp or Instagram or Snapchat on their portfolio company page, so they can take their time. Yeah, I'll wait. I'll see if you make it. Sure. So that's just things to know when you're going out there. Is that helpful to you? See ya.
Yeah, absolutely.
Great. All right, we'll keep listening. And
I had a personal anecdote, by the way, quickly.
Oh, here we go. Get ready to use the drop button.
Lab.
Okay, if this is offensive. Okay, guys, got to use the drop button if it's offensive. You're live.
Extreme Labs back in 2013.
Okay.
And I don't know if you know the company, but they worked on Launch Ticker, the app that was like your Twitter feed, basically.
Sure. Oh, you worked at that company?
I was an intern back then. And so like for 4 months, for like 10 hours a day, I was just like reading your tweets all day. So
that's fantastic.
That's pretty much it.
That's it. Thank you. Thank you. Yeah, no, it's like you never know what experiences somebody has had with you. So try to make every experience that people have with you a high quality one. And assume you're on tape.
Exactly.
Because everybody's recording everybody. All right, great job. See ya.
Cool.
Mac. Okay, see ya, Mac. I'll see you at Starbucks. J-Dog. What? If you're trying to grow your email list and your social audience at your startup, you need to do it on a budget, and you can do that with Dojo Mojo. We use it here. Traditional paid channels like social media require big budgets, you know that. And the ROI can be a little questionable. And that's where partnership marketing comes in. It's the fastest way to acquire high-quality leads at no additional cost. On Dojo Mojo, you can find and connect with 5,000 brands and create a marketing partnership to reach each other's audiences. You can find partners for content exchanges, package insert swaps, newsletter sales, and even build sweepstake campaigns all on one platform. And you've seen us do these sweepstakes. They really work. Directly marketing to consumers who are interested in your brand. Some brands have grown their email list from 0 to 1 million in just a year. And they have powerful brand search. It's easy to use for landing page builders to save your developers time, and deep analytics to make building partnerships easier than ever. So they make it easy peasy. Get 1 month free on any plan. Plus 25% off your first paid month with the code TWIST. So remember, the basic membership is always free, but if you want to pay for a plan, use that code TWIST and get 25% off your first paid month. Dojo Mojo, where brands connect. Visit dojomojo.ninja and use the promo code TWIST to learn more and sign up for free. That URL again, dojo, D-O-J-O, mojo, M-O-J-O, .ninja. I didn't know there was a .ninja. Dojomojo.ninja. Use the promo code TWIST. All right, let's get back to this amazing episode. Okay, let's take a quick question from the chat room. Mr. 11235813 asks, Jason, what do you think the main beef people have with Facebook is, and what alternative should be better? What should an alternative do to be better? It's really a good question, and that's why we created the openbookchallenge.com. I believe not offering a subscription and not policing these systems and making editorial judgments are two of the things that have killed Twitter and Facebook. Facebook obviously is a bit creepy the way they sell our information and track us. There's a group of people, I would estimate 5 to 15% of people who would pay for a social network that was higher quality with less noise and less garbage. It could be a pro version. So Facebook Pro could come out right now. I think 5% of people on Facebook would actually pay $5 a month for Facebook. I think they're terrified of doing that because if it does work, they would then, the people who would opt into that $5 a month would be the top of the advertising stack. In other words, the most affluent people would opt out, and then Facebook would be selling, the bottom 95% of users. But they might be selling, because the top 5% make most of the money in the world and have most of the discretionary spending, they might be eliminating 50% of the spend, the most expensive elite customers that they can sell to people. So that's why they're not going to do it. And they also are addicted to that ad business. Twitter obviously has become totally toxic. I have gone on a Twitter break. A number of other high-profile people are taking Twitter breaks. I'm taking a 30-day break. You'll see my team post to it once in a while, or I just basically deleted it off my phone. I'll check it once in a while from my desktop, but it's too disturbing. So I think Twitter's problem is policing all those spam accounts and making people on those systems use real names, and both would benefit from a real subscription process. So I'd like to see subscription ads, a subscription in addition to advertising as an option. Okay, we have Scott, and he is a caller live on the line. So you're listening to live calls on This Week in Startups. And this is our last one. Scott, are you there?
I am here.
Scott, the fidelity of this call is outstanding. Thank you to our Director Tony.
I'm a big fan.
Of Director Tony, me too. He's done an incredible job. He's been here for 5 weeks. He's amazing. Scott, where are you based?
I am based in Los Angeles, California.
Where in Los Angeles? You can't just say you're from LA. You're Silver Lake, downtown, Santa Monica.
I'm near Westlake, so MacArthur Park.
Oh, very nice. Very nice.
Yeah.
Okay, so I understand it's 137 degrees there today.
It's a little hot.
It's bonkers. This global warming thing, it can't possibly be real. Los Angeles is literally on fire. Every year, these fires are going off like crazy. It's 110 degrees. Greece is on fire. 75 people died. My thoughts and prayers for them, obviously. But it is crazy how hot it's gotten in LA.
Yeah, it was 107 a couple of weeks ago, which is pretty crazy.
I left 4 years ago. We didn't have these heat waves. I mean, we'd have 100 degrees, 105, but nothing over 110. It's bonkers. It's hotter in LA than it is in Arizona. We had an Arizona call. Matt from Arizona was on earlier. Now we have Scott from Los Angeles. Scott, you have a question for me?
Yes. I'm really interested in the augmented reality space. And I just wanted to know what your current feelings on the future of augmented reality in the next 18 months going forward. And also, given the $2.3 billion in investment, what do you feel Magic Leap has to do to pull off a truly viable company that's worthy of that investment?
Two great questions. Augmented reality, for those of you who don't know the difference between virtual reality. Virtual reality, you put a headset on, and you're in 100% digital world. You do not see the real world. That's why when you take the glasses off, it's like being transported to another planet, and people are in shock when they take the headset off. Augmented reality is when you put digital assets, a virtual world, and you overlay it into the real world. So the Pokemon game where you throw balls and hit Pokies and all this kind of stuff, or when you hold up your phone and you put a couch in your living room to see what it would look like, and the camera or the headset is using the ability to project digital assets onto the real world. That's augmented reality. The companies that are leading in augmented reality right now are the HoloLens from Microsoft, and Magic Leap has something pretty amazing, supposedly. And Apple is working on glasses, and you've heard Tim Cook say over and over again, they're pretty candid when they give tips that he thinks augmented reality is interesting, and they're working on glasses. So in the future, you put on glasses, instead of taking out your phone, you would see your Uber pulling up, right? And it would put your face above the Uber. Or when you're walking down the street, it would say, you're connected to this person on LinkedIn through facial recognition, all kinds of crazy, creepy stuff like that. So augmented reality is a bit of a challenge because doing it through your phone is easy. That's a super powerful $1,000 supercomputer in your pocket. But to do it with glasses without the phone is going to take years from now, 5 to 10, to have enough power in your glasses to have standalone AR glasses. And if you look at the HoloLens, it's a big, heavy thing you put on your head. It's kind of comical. It's like the old days of laptops or the old days of personal digital assistants like the Palm Pilot or the Newton. These were giant, devices when compared to today's iPhones. So we're probably 2 or 3 years out from having really compelling augmented glasses that are very expensive, and we're 10 years out from having cheap ones. And when we do, there's a good chance that a lot of what you do on your phone will move to a voice interface and an augmented reality interface or a heads-up display in your glasses. So imagine you have your AirPods in and your Apple glasses. You leave your phone at home. The AirPods have LTE connection, and you have processors in the glasses. And you say, tell me the 5 best sushi restaurants near me that have a reservation for 2 available in 15 minutes. And then, boom, it shows them when you look at the skyline, you can look up in the sky and see how far they are, and it puts the, signature dish in the air above the restaurant and how the distance is. And you just say, okay, book me Dash Sushi in San Mateo, boom, and then you go. So that's going to be pretty compelling. Now, for Magic Leap, a lot of people have made an analogy, or not an analogy. They've tried to make a comparison, is the better word, between Theranos, a complete and utter fraud with no real technology, and Magic Leap, somebody who obviously has very real technology. The difference between these two companies is the companies that the venture firms that have invested in Magic Leap and have put $2.3 billion into a company with no publicly facing product yet, those people are all very highly respected investors who have all seen the product and talked about what they've seen. So it is obviously compelling enough to have people pour money into it because everybody believes that this is the next smartphone. And if you look at the smartphone has created hundreds of billions of dollars in revenue and trillions of dollars in corporate value. So if you look at Facebook and Apple and Google, what percentage of those 3 companies' market cap is based on the smartphone revenue? It is the majority, right? The majority of ads are seen there, and the majority, obviously, from Apple comes from those profits on hardware and Android at Google. Putting that aside, that's why people are willing to take a big risk. If it winds up being, let's say, a multi-trillion market, $2 billion. It's a fine investment. There's a lot of money out there. To make it actually work as a viable company, they would need to have, if they're valued at 4 or 5 billion, you're going to talk about needing to have 10% of that in revenue and be growing fast. So a $5 billion company, people would expect would have 500 million in revenue and be growing quickly, like tripling every year. So that's what they would need to have, 250 to 500 million in revenue to be worthy of being a $5 billion company. Currently, they have no revenue that I know of. They're burning a ton of money. So it could be a huge train wreck. It could be a fire sale, but it's not a fraud. I would guarantee it's not a fraud because qualified people have vetted and used the technology. Whereas with Theranos, people put money in with never seeing the technology. And the people who asked to vet the technology, as described in the incredible Bad Blood by my friend John Carreyrou, Pulitzer Prize winner, although he didn't get a Pulitzer for Bad Blood, which is a crime. He describes what an incredible fraud that was and how these people were dipshits. Okay. Scott, you got a favorite episode?
The one with Cyan Bannister.
Oh, she's great.
That was great. And also the one with David Benahum when he made the case for starting a company in Montreal.
Yes. Good pull. I like it. 2 good pulls, Scott. All right. Continued success. I'll see you at Avengers 14 down in Redwood City in the D-Box seats. Okay. Bring me a Five Guys double. All right. Talk to you soon. Great call. Okay, everybody, this has been an amazing question and answer session. I love doing these. If you want to ask a question next time or be a live call-in member, just email askjason@launch.co. Askjason@launch.co. Please do me a favor. Go rate and subscribe to the show on every podcast player and platform you can think of. That really helps. But most of all, you probably know a founder who is looking for advice. Just send them to thisweekinstartups.com and say, here is your MBA. It's free. There's 850 episodes. Start listening. Okay, we'll see you all next time. Bye-bye.